Chairwoman Waters, Ranking Member McHenry, and distinguished members of the committee. We work every day to earn the trust and confidence of our customers and the communities we serve. It is essential to how we run a healthy and vibrant company. While we will never lose sight of the lessons learned, post-crisis reforms have addressed key concerns. During the 2008 financial crisis, the U.S. government took extraordinary and unprecedented actions to stabilize the system, and we all owe a debt of gratitude to the policymakers who stepped in on behalf of Americans. We are proud of what we did to help. With markets in complete turmoil, we were able to lend to California, New Jersey, and Illinois. Additionally, we loaned or raised for our clients $1.3 trillion at consistent and fair rates, in many cases far below what the market would have allowed. And we provided more than $100 billion to local governments, municipalities, schools, hospitals, and not-for-profits over the course of 2009. At the request of the United States government, and in an effort to stabilize the system, we bought the collapsed Bear Stearns and later purchased the severely distressed Washington Mutual. JPMorgan was there for our clients and customers through good times and bad. We didn't cut and run. And I want to pause for a moment to thank the 250,000 employees of JPMorgan Chase for their extraordinary efforts during these difficult circumstances. Since the crisis, reforms have made banks much safer and sounder in three important areas: capital, liquidity, and resolution and recovery. Large banks have almost doubled the highest quality capital to protect against losses. Under the Fed's most extreme stress testing scenario, the combined losses of all the 34 banks is only 6% of total capital. Large banks have tripled the liquid assets to protect against unexpected cash flows, and resolution planning has created a credible framework for unwinding a large bank. Lehman simply would not happen again. Legislators and regulators deserve credit for putting these basic rules in place. We all now must look forward for emerging threats to the stability of our system. Unregulated non-bank mortgage and leverage lending is growing rapidly and needs to be monitored. We need to spend more time on critical issues like AML, BSA, cyber, privacy, and global competitiveness. At JPMorgan, we relentlessly invest in our businesses, our people, and the communities in which we operate. In the United States, we've raised wages and expanded benefits for 22,000 entry-level employees to $16.50 to $18 per hour. We subsidize more than 90% of the medical plan costs for employees making less than $60,000 a year. In 2016, we introduced Advancing Black Leaders, and an expanded diversity strategy focused on increased hiring, retention, and development of talent within the black community. Within the last 2 years, our company has increased the number of senior black executives by 40% to 50%. And last month, JPMorgan unveiled our Advancing Black Pathways initiative and brought our Entrepreneurs of Color Fund model to Greater Washington, D.C., among others. At the local level, in more than 30 cities, we have sat down with diverse groups to identify ways to meaningfully address issues as skills, investment, and how to collectively help the people in those communities. JPMorgan Chase's $150 million investment in Detroit was generated by a meeting between myself and Lee Saunders, a leader of the labor movement. This has led us to develop an investment model, now known as Advancing Cities, to help more people move up the economic ladder, and it's working. America is still the most prosperous nation in the world. We are blessed with natural gifts of land and all the food, water, and energy we need. We have the most dynamic economy in the world, with vibrant businesses, large and small, exceptional universities, and unparalleled innovation. However, there are too many people that are not sharing in the prosperity. There are urgent priorities that are holding us back. Our education system is driving inequality and lack of opportunity. Inner-city school graduates, often less than 60%, graduate. Our healthcare costs now represent almost 20% of GDP. The U.S. no longer ranks in the top 20 of infrastructure spending in the world. And there are many other issues that must be addressed. Government and business can work together to solve these problems, and if we don't, our moral, economic, and military dominance will cease to exist. While I have a deep and abiding faith in the United States of America and its extraordinary resiliency and capabilities, we do not have a divine right to success. The oversight of this work of this committee is a critical responsibility, and I will respond to any questions you have. Thank you.